I got another nice Forex setup for you guys today. Hang out a bit and I'll share it with you. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a trading range on the Canadian dollar-Japanese yen Forex pair. We'll look at that, but first we'll take a look at a few active trades. Later on, Tim's trading maxim. You know, it's Monday today, and we're definitely headed into my favorite time of year, which is any time it's less than 80 degrees in North Texas. Remember to click the subscribe button and hit the bell so you don't miss any of these great trade setups. Let's take a look at our active trades. Palladium has finally given us a couple of nice closes above this 23.05 level. So I'm ready to go back to trailing my stops with the parabolic SAR. Currently the stop is 22.35.48, locking in 242.77 on this. This is a really nice full-size position, guys, so we're making bank on this trade. Planet Fitness hit our stop on Thursday. It was a half-size position due to the reduced volume on the day we took this trade. So we only made a 0.6% gain on our account for this. Done with the Planet for right now. Friday, Google pushed past halfway down to our first target and then pulled back. I'm hoping we'll get a continuation of that move this week. And that's all the active trades for today. Let's take a look at today's. Canadian dollar Japanese yen has been in this great trading range since back here in May. Just to be sure everyone's on board with us on this, a trading range is a consolidation with a strong support level like this one at 78 and a strong resistance level like this one at 81.50. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. And as a nice confirmation of this consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR. And here's our trade plan. We're going to buy a daily candle close above the range, or above 81.50, or we'll sell a daily candle close below the range, or below 78. On the breaking candle, to enter a full-size position, we want to see this volume bar reach up to this volume average right here. If it doesn't quite reach the average, but does reach 75% of the average, I'll take a half-size position to reduce risk. You can calculate that percentage by taking this volume number here, dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on this trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So let's say this thing breaks up here like this, just ahead of the close, maybe 15 minutes or so before the close. You will enter your buy order here. Take a look at the ATR right down here. Multiply that by 1.5. Measure that distance back here for your stop loss. Measure 1 ATR up here for your first target. And of course, just the opposite if the break is to the downside. If after entering the trade, we get a candle close back inside the range, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of this pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this with 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move our stop up to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on Canadian dollar, Japanese yen currency pair. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for you, things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to be sure that you always do the right thing. And feel free to borrow from my list. And today we're going to dive deep once again. Tim's trading maxim number 7. Trade what you see, not what you think. I firmly believe that everything that can be known about a market is already priced into the chart that you're looking at. Obviously, there are caveats to that philosophy, like upcoming scheduled news events and other anticipated world events like Brexit, for instance. The current price has those events already built into it, but a surprise deviation from the expected result of that event can move the market in unexpected directions. Notice what I said right there, unexpected directions. In other words, you can't anticipate the results of those events. So you should protect yourself against unexpected moves, but you should still trade what you're seeing on the chart, not what you think the market could do. And especially don't trade based on someone's hot stock tip online. You never know the motivation behind those tips. If you want to be a successful technical trader, you have to trade solely what you're seeing on the chart. Remember our Canadian dollar Japanese yen trade plan for today. We're going to buy a daily candle close above the range or above 81.50, or we'll sell a daily candle close below the range or below 78. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Be sure to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box. If you're following the Dream Trade setups from my Wednesday's video, it looks like AUB came down here pretty close to hitting our first target last week. Still waiting for it to hit this 21.77, and then we'll be moving our stop loss down to break even on this trade. Don't miss the Dream Trades segment on Wednesday's videos. Click the link below to find out more about Dream Trades. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. And don't miss the next installment of the Trading Education series this Wednesday, when we'll be talking about some of MT4's settings dialogues. If this video helped you, click the like below, subscribe and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you on Wednesday.